Hey everybody, welcome back to another episode of Bullish's Top Stocks to Watch for the weekend. Why? And before we get into it, as always, hey, these are only my opinions. Do your own due diligence. I'm not a financial planner or advisor. This is like for me to help prepare for the week, but also to kind of show what I'm watching, but most importantly, why I'm watching. My bold thesis on that, right? But some of them I'm playing, some of them just watching. But I try to definitely keep abreast of the market for myself every week, and this show really helps me at least kind of like have 5 to 10 really solid stocks. Not looking at a bunch of them, but looking at a few targeted ones and having my thesis why. So when the week starts, I kind of know what I'm going into. Hopefully, this is helpful for somebody. If you want to see anything else, definitely drop some comments below and let's take a look at them. Let's take a look at the stocks. Trading is definitely a team sport. I believe we can all be winners and losers and still kind of win in the long run, in my opinion, at least. But also, hey, give us a sub here on YouTube. Help me feel good about myself. Give us a thumbs up. That really helps as well. Like I said, drop some comments what you're watching, and if you don't agree with me, hey, definitely drop that. And then we'll let's have a discourse, right? Real underscore bullish. Also, wherever get you social media poison, I throw up polls and stuff like that, and just throw little tidbits of information that I find helpful to myself. Hopefully, it's helpful to other people on Instagram, Twitter, stock twits, things like that. Also, realbullish.com. Go give our newsletter a follow. I'm gonna change up what I'm thinking about doing with the newsletter here pretty soon. But definitely go give us a follow. The next 50 people that follow, hey, throwing in a bullish T-shirt, for doing a random kind of subscriber thing and saying, hey, here's a T-shirt, right? Already sent one off, so they were pretty happy about that one. But anyways, gonna jump into what I'm looking at for the week, and hopefully you can see my screen. If not, oh well. But I'm starting out with VTSI, VirTra. It's an industrial defense play. It's kind of like a simulation technology. For defense and police agencies and stuff. So this one's interesting to me because they have an earnings report on 11:15, I believe, after market close. So that's Monday. So quick turnaround. But for me, this wasn't something I had to get in. I wasn't like clamoring to get into this one before earnings for a few reasons. Right now, though, it is 45% under the average analyst price targets. And if you look at, you can find that average analyst price targets anywhere like Yahoo Finance. You can find it on FinViz. I don't know about Seeking Alpha, but those two are usually the ones that I go for. And they're relatively pretty close together, right? Like I said, 45% is usually more of a yellow red flag for me because I like things like 20% or under the average price target because usually that signifies some type of sell off, which you do see definitely in the charts, or something like underlying with the chart action, with the price action of the chart itself. So that one's a little bit of a yellow red flag for me. But the thing that was interesting to me, like I said, 11:15 after market close, they have they have earnings. Their EPS, so their earnings per share quarter over quarter estimates are expected to be 400% what they were last year for their EPS estimates. So anytime you see kind of 3-digit numbers, those things kind of are things that those are numbers that kind of ring the register for me and like say, hey, look at this a little bit deeper. But going into the earnings and why I wasn't too worried about getting into this before the earnings and made more of an after earnings play for me after 11:15. Over the last 12 quarters, they've only beat EPS expectations met or beat EPS expectations 50% of the time. And over the last 6 quarters, the next day after the earnings release, they've only raised 50% of the time, right? So I like to see those numbers in the 80s, 90% to really feel good about getting into a stock before the earnings, right? Because hey, only half the time they meet or exceed only half the time they even raise after earnings the day after. So those are things for me to keep in mind. But like I said, when you see that 400% EPS increase, that's interesting to me. But also looking into the charts, they had a lot of support, channel and horizontal support. I'll go into what I mean by that. But looking at the month level, it looks actually pretty good. You know me, like I don't like to chase things at the month level or any level when they're too far away. This 10 EMA line, this blue line here. I love to use EMAs as like a sense of like how far something has gotten from the mean because that's what it's showing you, right? Over the 10 periods for this one for the past 10 months, this is kind of what the average price is, right? I don't want the price too far extended. Like here, I would hate if I bought up here and I had to hold it all the way back. It's all wave theory, it goes up and down. But at the month level, it looks really good. It has an upward channel. It'll show a little bit better here in a few, but it caught the bottom of the top of this 10 EMA, and then it found some support rising up at the month level. At the month level, RSI isn't too extended either. It's not close to this 77 area at that 62 area. So when you have 15 there in terms of the difference between it. So you still have some room to grow at the month level for RSI. MACD isn't looking too bad either. It's looking to want to pinch to be flat, but still not bad. So at the month level, this isn't a bad one, right? I actually really like the month level chart on this, and it gets a little bit shakier as I get in, and I'll show you why. At the week level, you still see that upward channel kind of going up, but also at the week level, you do see it under this 10 EMA. Sometimes it does act as resistance as prices want to go over that 10 EMA to kind of go to new areas. But we'll see as it plays here. I think that at the week level, RSI is still kind of like flat. As we saw at the month level, it was rising. At the week level, it's a little bit mixed, right? It's kind of declining, not too bad, but a steep decline. MACD is showing that same thing. So even at the month level, it looks pretty good. At the week level, it's a little bit shakier here, right? But the important thing is it did over the past 3 weeks find support here at this 7.9 area is what I kind of, 7.5 to 7.88 area is found support. So that's kind of how I want to play this one if I do play it this week. I wanted to play it last week. I just didn't get into it. I didn't have time to get into it. But at the day level, it actually looks really interesting. So it's a little mixed. The month chart looks good. The week chart looks kind of but the day chart, you see this channel a little bit better here, right? You see the top of the channel here, the bottom. What I like about this one is you can make a really good trading plan to say, hey, okay, I'm gonna play this one. This is how I'm thinking about it at least. I'm thinking about this one as a channel support here, horizontal channel. If it breaks under that, great. I still have lower channel support here at that upward channel movement that we saw here, right? It's an upward channel happening, right? And I have kind of two levels of support that I want to play that I could possibly play, right? And that's exactly how I do this. I know I annotated this fib 38 level, I think 38, 50, and 60 or 60 something, or I can't remember the exact number now, are those three areas of the Fibonacci retracement that usually I try to stay for main areas. And this right here, this upward, this will be my price target 1 or 2 possibly, because this is not only a level of significance, as you can see, a few different days where this acted as an area where I wanted to touch, but this is also a 38% retracement level if you take the top of the peak to the bottom here, that's kind of like a movement, right? And that's that 38% area that looks significant right here. So I think there's a lot of interesting things here. So this would act as maybe a price target 1 for me here, because you do see kind of that 38% level here. But also the RSI, right? We saw at the week level it was kind of going down. At the day level, it's rising. It's coming up, right? That RSI is picking up. It's steeper versus a decline, which is awesome. And it's only at 47. Like I said, 70 and 30 are two areas of possible correction on the downside and the upside. This one looks like it runs a little bit hotter, 78, 79, let's say, for the RSI before it needs to sometimes correct. But right here, it's looking pretty good. And at the MACD level, which I love it when they line up, it makes sense to me. It's starting to get green, right? At the day level as well, right? So you have a lot of upside here. Hopefully, this upcoming ER on 1015 will act as a catalyst, but only time will tell. The other one I'm going to try to go a little bit faster because I do have a few ones I want to get to. Earnings for me, I love playing earnings, but usually I don't actually. Well, sometimes some weeks I don't find any earnings that I like, but this week there was a lot of them. Keep in mind though that this week retail is really going to show out. So that's your WalMarts, that's your Footlockers, that's your Home Depots and shit. But with COVID and supply chain constraints and inflation, I think that there's going to be a lot of headwinds going into earnings, because also people are not going to know how, I think, in my opinion, how the next month, the next 2 quarters are going to play out with all the COVID stuff and everything like that. So I'm keeping it light on my retail, but I still wanted to show this one that I was looking at. Actually, I was going to look at a different one here, but I chose Footlocker instead. Footlocker has earnings on 11/19 before market opens. Hopefully, I'll pull it up on screen already. They're a consumer cyclical play, right? So you have to kind of play that with a grain of salt, because you do have inflation, you do have more transitory inflation, whatever you want to call it. You do have supply chain constraints. So this is going to be interesting to me. So even though with VTSI, I kind of wanted to play that a little bit looser with maybe 2 stop losses, I would keep my stop loss for Footlocker a little bit tighter, because you do have those headwinds coming into retail as I see it. But the interesting thing about Footlocker is they're 28% under the average price target. So that's more of a yellow flag for me. Like I said, I like to play in that 10 to 20% area, right? For the like price under average analyst type price targets. But I will show you why I think this one's a little bit easier to play for me, even though you do have that 28% difference there. or delta there. They had a dip around 519. That was like two earnings ago, right? Where I think they had earnings on 521, and on 519 they had a really big dip on the top line here. There was really nothing that I could find that could like maybe somebody knows what the catalyst was to the downside for Footlocker. I couldn't find what it was. What I did see is on their earnings that they reported, a couple days within that sell off, they had the company said that they didn't have any upcoming COVID guidance because of COVID-19, right? So they're not going to provide any end of year guidance. A lot of times that's what people do not like to see because they don't like that uncertainty. But like I said, with all these retail stocks and stuff, that's kind of the norm because people don't know what's going to happen, right? But anyways, so you do have if you look at the same quarter year over year, or sorry, yeah, same quarter year over year. Yeah, I said that right. They have 114% EPS estimated increase for Foot Locker, right? So, like I said, when you see those three-digit numbers, those really are interesting to me because those buzzwords are going to really kind of like pop people and get them excited. Gets me excited at least. What I love, what how I position this different from VTSI because for me, Foot Locker couldn't be a before earnings play for the either that pop in going into earnings or possibly holding it through earnings if you got the steel to do that, let's say, or the metal, because it takes some brass ones to hold through earnings, which I do sometimes. I do usually sometimes. But over the last 12 quarters, and this is what I love about Foot Locker looking at it, they beat or met expectation 83% of the time. When we looked at VTSI, it was at 50-50. I don't like that coin toss. But when I have 83% tailwind behind me, I think that that's more in line with what I want to do. And over the last six quarters, this is the toss up, they've only raised 50% of the time after earnings, right? So even though the last 12 quarters, they beat 83% of the time or exceeded, they've met or exceeded after over the last six quarters. So more recently, right, they've only raised 50% of the time. So there's your toss up right there. I want that number to be higher, like 80, 90%. But you do what you got to do, right? But what I did like about looking into Foot Locker, into their kind of more of the financials, and that's kind of how I like to play these. I need a catalyst. I need the charts to look good, and these charts are okay. And I need the financials to make sense, right? I don't want a price to sales or price to earnings ratio that are going to be super high. I want to get some value there, right? This one to me is interesting because if you look at Foot Locker, I didn't know that Foot Locker paid a dividend, but they actually pay a 2% dividend, a little bit over 2% dividend yield, right? And that's the highest in their peer group, right? They have a price to earnings ratio of a forward price to earning ratio of 7.88, right? So that's actually the lowest in the peer group. So they pay the highest dividend in the group. They have the lowest price to earnings in the group, right? So there's a lot of value there, in my opinion. And they have the lowest short. So people aren't betting on this one as much as their peers, like American Eagle and stuff, to go down, right? I will say they're middle of the pack in terms of their revenue and margins, right? They're not spectacular, not the worst, but they're kind of in the middle of the pack for revenue and earnings. They got a lot of cash on hand. I think one of the most that I saw in there. And it's easy. You just go to Seeking Alpha, you go to a stock you're looking at, and you go, I think, all the way on the right. And it says it's a peers tab, and you can kind of do all these comparisons and then really get into nitty gritty if you want to, right? So that's kind of how I start looking at it. And I'm trying to get better about my fundamentals. And this is just kind of like that, not that superficial, but a little bit deeper than saying, oh, great, they have good earnings. Now let's look at the company itself, right? And in respect to its peers. That's how I like to think about it. But I will say, like I said, since inflation, is where it is, I wouldn't give this as much wiggle room to drop. I do have a hard stop loss at 53.5, and I'll show you why. But also, I see some interesting catalysts or interesting chart patterns. What I do notice at the month level, though, I'm sorry, I'm trying to do 15 minutes less. I'm not going to get it. Damn, I was trying to do 15 minutes. I do see at the month level higher lows coming in, so that that's something to keep in consideration. But at the month level, hey, RSI is going up, MACD's kind of rounding out as well. I love that. Like I said, this 10 EMA, it's starting to break over that, which I do enjoy. At the week level, still looking good, and that's why I like week, month, day. This is all looking good to me. At the week level, it is a little bit far extended after this week over that 10 EMA. Not too bad yet, but it has moved away from it. But the thing I love about this is RSI is really starting to pick up here. Looking at 53, this thing can run up to, without cooling off, 76, right? But importantly, MACD is showing that same kind of upward trend. MACD hasn't been green at the week level for a few weeks now, right? Several weeks, since 6-7, the week of 6-7, that's when it crossed over. A little bit before that. Right now, it's starting to cross over to be bullish, right? But if you look at the day level and why I was really looking at it, you see a few interesting things here. You see the support area here, 54.48. This is what I was saying. This is the area that I would not let my price, if I got into it, fall much below that. I would, because if it does fall, it's a far way down, right? But I did notice that there was a Fibonacci retracement here at the 38 level. So right when you look at the top to the bottom, right? So you do see, if you look at the peak I can show it maybe better at the week level. If you look at it at this run to this run, this level right here is the 38% Fibonacci retracement level, right? So it smacked into that fib line and it reversed off of that, which is really good to look at right there. Like I said, I would actually play this either right now. This is how I think about. I'm going to play it either for the a break of this down because it isn't a downward channel, the break of that. But also, it's an interesting thing here. If you know what a golden cross is, it's when the 200 sorry, when the 50 EMA goes over the 200, so the faster and the slower movings kind of like come together and go over. So the 50 is actually this golden line here. The 200 is this line here. So if you see this one's the 200 is pretty much staying flat, where the 50 is like really picking up to increase over. So when that happens and this line crosses over, this one is called the golden cross. The opposite is also true. It's called the death cross, and that happened here, where the faster and the slower kind of go to the downside, and that's pretty bearish, but this is pretty bullish when they kind of pick back up. So I think a few interesting things here. You have channel support. You do have resistance here at the channel level, a downward channel, but you do have support at this 50, 53 point, whatever the 5-6 level. You do have a possible golden cross in the future. And then if you can break out of this lower channel here, I think you'll see some interesting stuff to the upside. I will note that the RSI is pretty close to like 70 and 30, the two areas of correction. It is right there, right? The last one I'm going to go, oh, sorry, not last one. Oh man, I might have to cut this one short. The other one I'm going to is Cisco Systems. They have our earnings on 11/17 after market close. I see that as an infrastructure and communication play. So the communication group over the last month, or sorry, over the last week, I look at groupings every week and compare them to the previous groupings, like whether it be last week, last month, whatever. Communications has actually made a jump consistently at different time frames, whether you look at week, month, half year, right? It's interesting, and you can see this all at FinViz. You can't track the history, that's why I track it separately in a Google sheet. But basically, I take screenshots of the groupings every week and I compare them. And if you layer them on top of each other for like week over week, you do see that communication is making it higher and higher. Tech is always at the top, so this is kind of a communication tech play for Cisco. I used to be in switching and routing, so I'm a big fan of Cisco. The thing about Cisco that I like right now, they're 9.16% under the average price target. I love that 9-10 area, right? Where like it doesn't show itself, but it shows that there's still it's still under fair market value, so you can get a lot of value there, right? The same quarter year over year is actually only 14%. That's pretty meh to me. Like I said, I like the 3-digit numbers. 14% is just meh, but there's a lot of things that are baked into that, in my opinion, like the slow growth. The growth, looking growth forward, their growth sucks, but they're trying to invest in that kind of cloud infrastructure play. Even though they really led the hardware infrastructure play, they're kind of lagging behind the cloud infrastructure play, and hopefully we'll see in the earnings, or maybe that they're kind of counteracting that, right? A thing that I love though about this one, not just that they were, there's still some meat on the bones price target wise, but also over the last 12 quarters, they've met or exceeded expectations 100% of the time. 100% of the time, they've met or exceeded earnings. So there's nothing that's going to come out in the wild and say, oh great, they missed. The market's really good about pricing them in, and then Cisco's good at meeting or exceeding those expectations. But over the last 6 quarters, they've only raised 67% of the time the next day. Still the highest in the ones I looked at, but still, it's still not 80%, which is what I really aim for, right? But still pretty good there. I see this as a value growth tech name. They have a high dividend. They have actually the highest dividend in their peer group, and their price to earnings sitting at 17 forward is more in the middle. So same with kind of Footlocker, right? They have a really good dividend pay, highest in their sector, but also you kind of pay for that because when you're paying a dividend, you're kind of also kind of saying that you're not going to grow as fast. But I think that Cisco is in an interesting place here where they're kind of preparing for the future growth, being who they want to be next, right? But they do have low revenue increases year over year, right? I like this one specifically. I'm trying to go faster, so I'm not going to go the month, week, day. But I like this one because for a few things here. You have some support here at this level here at 56.11, right? For that horizontal support. You also have the bottom of channel support, right? So I really enjoy kind of that area here because you do have two things I can play for this. A break of this stop loss, great. I'll just try to get it at this bottom of channel. If neither of them work, you got to cut your stop losses. But since that area is so compact, you do have a lot of support there, in my opinion. But also you have this area 57.31 where it kind of floundered there. It got rejected, but I think it was trying to wait for this earnings. And I love catching earnings at the bottom especially for companies like this that always beat earnings and sometimes raise after. So that's what I'm looking at for that one. Also, another one I wanted to watch because they do have. So this can also be like I said, thought of an infrastructure play because we do have the bill signing that's coming supposedly on Monday, so 11/15. President Biden is supposed to, even though they passed the infrastructure bill, now President Biden is supposed to sign it. So I think there's going to be some interesting plays here. Alcoa specifically is one I wanted to look at for me. I called this out on episode 30, 28, 37, 40. I think this is going to be an interesting one that I wanted to bring back because I think there's still meat on the bones here. It broke and held the 520 support area. So I would hold it, the way I want to play, the way I think about playing this one is even with a 5% stop loss from this area that it's in right now, it'll still get you here to the bottom of the channel. So again, like I looked at the last one, you do have horizontal support, you do have bottom of the channel support. And if you really wanted to hold this one because you believe in it, you would have this 45, 44 area support. I wouldn't actually do that. I would just keep the two stop losses. That's how I'm thinking about doing it. But you do have a good risk reward here, in my opinion, because you do have two channels. It was in this upward channel, but it broke out of that one. It made a new channel here. It's finding support, like I said, at the bottom of this horizontal support, this bottom of this channel support. So hopefully you can start breaking back in to this upward, to this other channel here that it was in originally, right? So yeah, Alcoa is the other one that I wanted to look at as well. Tyson Foods is the last one. I swear I'm almost done because it's at like 50, yeah, 20 minutes. So TSN is the other one. This is actually one that I was looking at. I bumped this one off because I actually liked Footlocker a lot better. But this one is interesting because it's actually 6% under the average price target. And the estimated year over year EPS increase is 70%, right? So not that three-digit number, but still not that, 14% from Cisco, right? Like I said, it's not a sexy play, but they do have a dividend and they have a price to earning ratio of 10. It's actually the lowest in their peer group. Their profit is shit. Their margins are expected to get kind of schwacked because of inflation. This is why I didn't want to play retail and that as much because, and especially consumer defensive, because people are getting hit with inflation. There are, transportation cost increases. So there's a lot of headwinds going against these earnings. So I was kind of playing this as something to watch, not necessarily play. But they do have that 70% increase to EPS estimates. And over the last 12 quarters, they've actually met or exceeded expectations 75% of the time. And over the last 6 quarters, they've raised 67% of the time the day after, right? Interesting to me too, because when I looked at Tyson, I saw something kind of, it is respecting the bottom of this channel. You see a channel that started at 8.5 basically all up until now. It did break out of it recently on Friday. That's kind of why I kind of got shook out of it. But as long as it can stay over this, 80.49 area, it's interesting to me. I do see a double top here going from 1022 all the way to this coming week. So if it does hit, there's no thing as a triple top, right? People are, I mean, it sells off from that, right? So you do see a double top here, over the past month. So that kind of like shook me out of like, oh, it was looking good, and then it kind of broke out. But if it can find support at the lower channel, hey, I can get it at a better price point. Like I said, I think I'm more on the fence about Tyson Foods just because of all of the headwinds coming into it. But anyways, I really appreciate it, y'all. Have a good week. If you have everything you want me to watch, help we can all look together. Hey, drop it in the comments. A couple people have done that, or hit me up on LinkedIn or sorry, Twitter, and it's been pretty interesting to kind of be able to share ideas. So again, that's VTSI. FL, CSCO for Cisco, Alcoa bringing that boy back, and then Tyson Foods. Everyone have a good week and stay blessed.